Glad to be here. Good morning, everyone, and welcome. Today we are starting a new 4-part live series about trading automation, expert advisors, and trading bots. Oggi iniziamo con una nuova sessione di 4 puntate dove parleremo di automazioni, expert advisor e trading con i bot, trading automatizzato. Questa live sarà solo in inglese, ma troverete la stessa live tradotta completamente, pronta e registrata in italiano sul mio canale YouTube e sul canale YouTube di FunderPro. This series is proudly sponsored by FunderPro, and throughout this session we will use the FunderPro environment as a practical reference. So the goal is not to simply to show you how to automate a strategy. The goal is to understand how to build an automated system that is logical, measurable, and compatible with the rules of a prop firm. And before we begin, let me remind you of something important. During today's live, you can use the code LIVE to receive 15% off Funder Pro challenges, instant accounts, or futures account. I will mention it again later, but for now, let's focus on the real subject of today's session. Why coding a strategy can completely change the way you trade. Let me start with a question. Have you ever watched a video where someone presents an incredible trading strategy? Maybe they show you a few perfect trades, they draw some lines on the chart, they explain the entry with complete confidence, then they go for a new rule, and then an after rule, and then another one, and then they show you a backtest and say, look at the results. This strategy works. After that, they tell you to backtest it manually. So you start scrolling through charts, okay? You do like this, no? You go on TradingView, you select your chart, your time frame, you go with a replay function, you go back in time, and then you start doing like this, right? You go like this. Oh, this is the moments where I want to sell. And then you go, you place your sell, and so on and so on and so on. Well, good. After that, you start recapping, and after hours and hours of backtest, because it requires time, 10 hours become 50, then you mark entries, exits, stop losses, and targets. Eventually, you have hundreds of examples, and the results might look really, really good. It looked promising. You begin to believe that you have found something special. Then you take the strategy live, and suddenly the results that looks very good on the equity curve of the backtest starts to look something like this. Right? Did it happen to you? The results are completely different. The market seems lower, the entries do not look as clear. You hesitate, you enter too late, you move the stop loss, you close the winner too soon, you skip a trade, maybe because the previous one was a loss. And at the end of the month, you realize that the strategy you tested is not the same strategy you traded live. The backtest was one system, your emotions created another one. Then, usually the guru appears with the next big idea, the next big great idea. This indicator that makes the strategy work. This is the indicator. So I created the indicator for TradingView. So you buy the indicator, you buy the signal, you join the private community, maybe you buy another course. But the real problem has not changed. You still do not know whether the strategy has a genuine edge. You still do not know which rules are essential. You still do not know what happens when market conditions change. And you still depend on your interpretation in real time. This is where automation becomes powerful. Not because it's magic, not because a bot can predict the market, and definitely not because a bot can guarantee profit. A bot simply follows instruction much better than we can do. If the instructions are poor, then the bot will execute poor instructions faster and more consistently than a human trader. But if the rules are clear, tested, and properly designed, automation can help us remove unnecessary discretion, enforce risk management, and evaluate a strategy with much greater consistency. That is the real purpose of this series. We are going to start with a trading idea, transform it into objective rules, test it using TradingView and PineScript, analyze the results, adapt the risk to a PropFirm environment, and eventually turn the logic into a working expert advisor. Whether you're gonna be trading with a CFD account or a future account, it does not matter. Just change the rules. The rules can change, the environment can change, but the purpose of this is unchanged. And because this series is sponsored by Funder Pro, we will use Funder Pro Classic two-phase challenge as our main example. This is what I like most, because to me, Funder Pro Classic two-phase challenge have the best ROI ever. Let me show it to you. If you go to Funder Pro website, you can change the language from here, of course, and you scroll down. This is what I like. Classic two-phase. This one right here. You have a right here, like the challenges. You have a classic. Let's say you get a 100K challenge. You have the phase one, where you have a profit target of 10%. You have a maximum drawdown of 5%. That's great. You have daily drawdown. You have a max drawdown, overall 10%. Crazy good. And look, you have unlimited duration of the challenge. That is your edge. Probably they will cut this part. They don't want you to know this. It's unlimited. You don't have to rush. Okay? Funder Pro, don't cut this down. This is very important to help people. Then you have the second phase. You need to reach a 5%, which is quite good. Still have a 10% of maximum drawdown and unlimited time. Then you go live. And what you made is yours. 80-20 split profit. 80 goes to you. Pretty straightforward. These, to me, for automatic trading, for bot trading, have the best ROI, return of investment. You buy this challenge, you spend, with my code, you have 15% off 100K classic, $500. Use the code live, you get 15% off, is $458. In euro is something about 400 euros. And you have $100,000 to play with. one trade at a time, no more than 1% risk per trade. You find a good strategy, good backtest, and you're good to go. Let's go back to our theme. I really like, let me tell you why I really like the classic challenge. For this project, I really like this type of environment because the rules, as you can see, are relatively clear and the structure is easy to understand. So again, 10% drawdown and 10% target in phase 1, 5% target in phase 2. It has 5% maximum daily drawdown, not a problem. We're not gonna go more than one trade per day and no consistency rule. That makes it an interesting environment for traders who want to develop a structured approach without having to build their entire plan around a complicated consistency calculation. Of course, rules can change and every trader must check the exact conditions of their individual account before trading. The information shown inside the account and the official Funder Pro terms always take priority. It's very important for you to read it. But the important point is this. Funder Pro allows the use of EAs and trading bots when they are used fairly, when the trader owns the system and when the automation does not exploit latency, platform errors, delayed prices, or other unfair advantages. Okay? This is it. You can think this is not good. You can think it's good. If you don't think it's good, grab your personal $100,000 and go trade with that. You can do whatever you want. But for just $400, you can have 100K to play with. You have to follow their rules. Their money, their rules. Okay? Keep that in mind, always. That is exactly the type of automation we are discussing. We are not talking about exploiting the platform. We are not talking about trying to trick the execution system. We are not talking about copying somebody else's trade or buying a black box system that you do not understand. We are talking about taking your own logic, testing it properly, and using automation to execute it in a disciplined way. Let me ask you something. When you trade, do you have your rules written down somewhere? Do you have a piece of paper with your rules? Or do you normally look at the chart and decide in real time whether something feels like a good opportunity? Write rules in the chart if your strategy is already written down. Let me see. And write chart if you mainly make your decisions by looking at what is happening in the moment. Let me see. Rules, chart. Okay, chart, rules. Okay, mixed. There is no right or wrong answer. Most traders start with the chart. This is completely normal. The problem begins when we confuse an idea with a complete system. For example, somebody may say, I buy when the market is strong. That makes sense to another human being. But a computer has no idea what strong means. Does strength mean that the candle is large? Does it mean that price is above a moving average? Does it mean that the market has broken a previous high? Does it mean that volume is increasing? Does it mean that the market has moved in a certain number of points? Before we write any code, we need to define the answer. This is the first major transformation in systematic trading. We take an interpretation and turn it into a condition. We take a feeling and turn it into a measurement. We take a story and we turn it into a sequence of instructions. That is why coding a strategy is so valuable. Even if you never intend to use the final button. Let me drink a little bit of water and let's check on your questions. Nice. Great. Beautiful. Back to our stuff. So the process of coding a strategy forces you to be honest. Exactly when do you enter? Where do you place the stop loss? Where do you take profit? What happens if the signal appears while another trade is open? What if the spread becomes too large? What happens if you have already lost money that day? What happens if the market reaches the target but the candle has not closed? What happens if important economic news is about to be released? A discretionary trader may answer this question differently every time. A coded system cannot. The computer needs a precise answer. This is also where we need to understand discretion. What is discretion? Discretion is the part of a decision that changes according to interpretation. I'm reading right now. Definition of discretion. Part of a decision that changes according to interpretation. Emotion or personal judgment. Sometimes traders call it experience. Sometimes they call it intuition. Sometimes they say they never, they are reading the market. And sometimes, let's be honest, it is fear and excitement wearing a professional suit. Those butterflies in your stomach may feel very important, but they cannot be reliably programmed. Do you really want to base the survival of your capital of a PropFirm account on whether you feel confident today? Ask this to yourself. Do you want to risk to increase your risk because you had 3 winning trades? Do you want to skip a valid setup because the last trade was a loss? Or because you just don't feel confident? If you can explain your strategy clearly, then you can start reducing discretion. If you can write it down, you can challenge it. If you can measure it, you can test it. If you can test it, you can improve it. And if the rules remain stable, you can automate them. Now, the first stage is not programming. The first stage is documentation. We need to explain what market we are trading, which instrument we are using, which time frame we are using, and during which hours the strategy is allowed to operate. We need to define the entry condition, the stop loss, the profit target, and the maximum risk, right? We also need to define what the strategy does not do. Does it trade during news? Does it hold position overnight? Does it hold position over the weekend? Does it open multiple trades in the same direction? Does it trade when the spread is unusually wide? These questions are especially important when working with Funder Pro. During the challenge phases, Funder Pro currently allows new trading. news trading, sorry. However, on funded account, news trading and news holding require the swing add-on. Weekend holding also require the swing add-on. That means the bot must know which account stage it is operating in. A strategy that behaves correctly during a challenge may violate the funded account conditions if it continues to hold position through the restricted news period or over the weekend without the appropriate add-on. This is why we do not design a bot first and check the rules later. We design the bot with the rules already inside the architecture. The same principle applies to drawdown. If the classic account has a 5% daily drawdown and a 10% overall drawdown, the bot should not be designed to walk constantly on the edge of those limits. The objective is not to use every available percentage. The objective is to build a system that can survive normal losing periods. If the strategy needs to risk 5% in one trade to produce its results, it is probably not suitable for a disciplined PropFirm approach. A professional system should understand how much risk is acceptable before it thinks about how much profit is possible. Let's take a simple example. So, imagine that we want to create a trend following strategy that buying on retracements. We say, I want to buy when the market is moving upwards. Right here. That is the idea. Now, we need to translate it. Maybe the price must be above the 200 EMA. 200 period EMA. Maybe the moving average must be pointing upward. Maybe price must break the highest point of the previous 20 candles. So we buy right here. Maybe the trade can only be opened during a specific session, like the, let's say, New York session. Maybe the stop loss is placed at 1.5 times the average true range. Right? ATR, we place our stop loss right here. Maybe the target, the TP, is 2 times the initial risk. So we have a 1 to 2 risk to reward. Maybe we have a 1.1. Maybe we have a 1 to 1.5. Now we have something that can be tested. Notice that we did not necessarily make the strategy more complicated. We made the language more precise. This is what PineScript allows us to do inside TradingView. You have the PineScript and you can code it. It's quite simple today that you can use ChatGPT or Claude or any AI system to encode your strategy. You can talk about the strategy in plain English or Italian or whatever language you use, and he's gonna create a set of rules, and these set of rules are going to be coded into Pine, which is the first language that I advise everybody to start with. This is not the best one. This is not what institutions are using, but this is a starting point. Okay? Of course, we should not treat TradingView backtest as a perfect representation of live trading. There are limitations. A lot of historical data may not perfectly reproduce the broker's feed. Slippage can change, spread can widen, liquidity can disappear. The order may be filled at a different price than expected, but PineScript is extremely useful for research. It allows us to test the same rules across thousands of historical candles. It allows us to change one parameters at a time. It allows us to see the equity curve, the drawdown, the number of trades, and the behavior of the strategy during different market conditions. Like, for example, I have this strategy that I coded, and we're gonna talk, and I'll walk you through this strategy very soon. And right here, you can see how it performed in the past. You have the total profit and loss. This is a period of time. This is April 5, 2026 to July 17th, 2026. So it's about 3 months period. It performed with a 5% profit, maximum drawdown 2.5%, 60% win rate, and a profit factor of 1.3. And it also taking consideration, let me see if it's properly, okay, maximum bar detailing. Okay, we can add the commission like 0.25 per contract. We can add a couple of points of slippage. We can add lot of slippage, a little bit of and you can see how it changed. It went from 5% to 3%, 1.3 profit factor to 1.2. And you have a lot of statistics down below, and as well as a list of all the trades taken. And you can go back and say, would this strategy have passed a challenge account, yes or no? This is the first step. So that's why this is very important to start from here. So that is already a huge improvement compared with manually scrolling through charts for hundreds of hours. Manual backtesting can help you understand individual examples. Automatic backtesting helps you evaluate the system consistently. The danger comes when we start treating the backtest as a promise. A backtest is not proof that the future will look the same. It is evidence, and evidence must be questioned. If I keep changing the parameters until the results look perfect, I may simply be overfitting the strategy to the past. I can create a system with a beautiful, perfect historical results that fails as soon as the market changes. We will talk about overfitting in another video, or join my YouTube channel, Michele Rossi Official, and I've already talked about overfitting in depth. So the objective is not to find the perfect moving average. The objective is to understand the behavior of the system. How often does it trade? How large are the average wins and losses? How many losing trades can appear in a row? What is the maximum historical drawdown? Does the system work only during one specific year? Does it depend on one market event? Does it still behave reasonably when we include costs and slippage, as I showed you? These questions are much more important than simply asking whether the backtest made money. A strategy can produce a 30% return but suffer a 25% drawdown. May be much less useful than a strategy that produces a smaller return with a more controlled equity curve. Especially in a PropFirm challenge, survival comes before acceleration. Funder Pro gives us an environment where automation can be used as part of a structured process. The bot can help us respect the risk limits, avoid impulsive decisions, and execute the same logic across every valid setup. But the advantage is not that the bot can ignore the rules. The advantage is that the bot can help us apply them consistently. That is a very different way of thinking. The bot should know how much to risk. It should know when to stop trading for the day. It should know when the spread is too high. It should know whether a position is allowed to remain open, whether a news event is approaching, what to do if an order is rejected. Where many people make a mistake is exactly this. They focus on the entry signal because the entry looks exciting. But the entry is only one small part of the overall system. Remember, keep in mind, execution, position sizing, risk limits, trade management, and monitoring are just as important as the entry. A working bot is not simply a green arrow on a chart. A working bot is a complete process. Stay with me, bear with me. We're talking theory. We're gonna look at it in practical, but we need to understand first what the bot does. It receives data. It identifies a valid condition. It calculates the position side automatically. It sends the order. It sets the stop loss and the target. It manages the opening range, the open trade, It records the results. And it knows when not to trade. And in the next live, next Friday, so next week on Friday, we go live. Monday morning, we go for a fundamental and preparation of the week. On Wednesday, we go for an update on the fundamentals, intermarket, and sentiment analysis. And if we find a good entry, of course, we trade live. And on Friday, we talk about how to start from an idea, develop the idea, code the idea, optimize the idea, validate the idea, and create a working strategy and a working bot, and then deploy live on a PropFirm account. Okay? So, we will take a strategy idea and we break it down into objective rules. We will look at what can be coded immediately and what is it still discretionary. We will define the difference between a signal, a filter, and a risk rule and a management rule. That session will be very practical. So I want you to arrive with one strategy idea in mind. I already have mine, but I want to hear and know about you, what you want to make. We're going to do it together. It could be based on breakouts, moving averages, market structure, support and resistance, liquidity, momentum, whatever. ICT concept, whatever you like. But you must be ready to answer one question. What exactly must happen before your strategy is allowed to enter a trade? That is where the real process begins. In the third live, so the third week, this is the first, we talk about the second, I'm talking about the third. We will test the first version and analyze whether the results are robust or simply attractive. And in the final live, so the fourth Friday live, I will show you the complete bot, how it operates, and how the parameters can be adapted to your own trading plan. The bot will be shown to you guys, okay? And so the whole process, you're gonna see the whole process, starting from the idea to the final working bot, so you can do the same. Remind that a bot is a tool, and the trader still needs to understand the logic. Choose the appropriate settings, test the system, and verify that the account conditions are respected. That is exactly why the series is important. This series is truly really important. We are not just pressing a button and hoping for the best. We are learning how to think like system developers, like a quant. Before we finish, let me leave you with one sentence. If you cannot define the strategy, you cannot test it. If you cannot test it, you cannot evaluate it. And if you cannot evaluate the logic, you should not automate it and not trade it. If you want to follow this entire process, make sure to join the next live, subscribe to the channel, leave a like, and ask any question in the comment section if you're rewatching this video. I will answer any question. So we will start from the recap next week. So even if you missed today's session, and I advise you to watch it again, you will be able to follow along. And remember, if you want to take advantage of the Funder Pro promotion, the code LIVE that you can see down below or up above, I don't know, it gives you 15% at the moment off today on Funder Pro Challenge account, Instant account, or Futures accounts. The code is available during this live and extra 30 minutes, but the real value of this series is not the discount. The real value is learning how to build a process that is clear, testable, and repeatable. Thank you guys for being here with me today. I'll see you again next week. Peace.